G'day everyone, welcome back to Pete's Investing. Today is June 29, 2023. This is the New Zealand US dollar currency update. On our weekly and daily we're in a bearish momentum, whereas the hourly is broken up into a bullish. So only trade the programs up, the back tests up here when all three timelines are aligned. So just be careful of that. And also we've got a divergence playing out on the hourly as well. So let's look at the weekly first. We've got the triple moving average of the weekly, the moving average of the CCI 150 and our oscillator. They're all showing bearish movement, so hence the bearish signal. And on the daily likewise, those indicators are all downturned and giving us a bearish signal. So we actually came and hit this below the 50% level of this wider Fibonacci range and hit this support at 59.85. It looks like we're approaching that as well, although there is a bullish candle slightly building after this long bearish candle yesterday. So we may see a bit of a retracement to the upside in the short term. On the hourly, that's confirmed by this little bullish divergence on the CCI. Just going back in a bit of history, we did have, just to show you here, we did have a bearish divergence on the CCI versus a bullish divergence on the price chart. We broke out of our channel there. We had a target set between the 38% and the 61%, and it hit our target before the last video was posted. So that was a successful trade. And since then the price has sort of been fluctuating up and down sideways, and it's finally broken down again. There was no other, and the way you read these obviously divergences, the CCI generally tracks with the price chart. So new highs, new lows, until we get to this point here. We've got a significant low, and the CCI is rising, and now you can see there the price is dropped to a lower point. So that's a bearish divergence versus a bullish on the CCI. So the way you would trade that, if you're new to the channel, and for those that just want to refresh, we draw a channel between those lows and bring it up to the highest candle in that range, in that divergence range. So that'll be your entry point. So if the price breaks, let me just pull it out a bit. If the price breaks above this upper channel, that's your entry point and your target area. So that'll probably be the lowest point there. We're drawing a Fibonacci now. So I'll go from that point there and bring it up to the most recent high, significant high. So you can see there when it breaks above there, it's very close to the 23%. So to give it a bit of a leeway, we'll aim for the 38% target. So let's draw a little target box, and that'll be our target area if it breaks into that, and that happens to be the 61.19 level, 38% Fibonacci retracement level. That's our target. So that divergence is independent from the weekly and daily trend. To trade the weekly and daily trend, we've got this back test up here. There's a short back test and a long back test. So again, when the weekly and daily are aligned short or long, you take the long or short trades based on this back test strategy. And I posted a video on that recent in the past, but you can basically trade any strategy. We don't use stop losses. You notice we average down. And to avoid the average down approach, as I said, you must trade with the weekly and daily trend as well as the hourly. So when all three timelines are aligned, you take the trades. And if you're caught in one position against you, then that's the drawdown you take. I avoid taking stop losses because that's proven to be unprofitable. So for me, this works beautifully. And as well as that trend programming strategy, we've also got this in isolation, the divergence. So to understand how to trade this and other trading strategies, subscribe to my Patreon page, where we also look at weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.